Morning everyone, welcome to Thursday. The PPI number came out this week pretty hot, but the CPI number and the core inflation specifically came in pretty low. And that's what caused the dollar and the 10-year yield to drop and everything else to rally, including the euro and other currencies and gold and Bitcoin and a couple of the other commodities as well. So a hot PPI number, the producer price index, and a cool CPI and core inflation rate means, I think, not very much. We're pretty much stuck where we are. The market, however, has got more optimistic about rate cuts in June, and so hence the pressure on the dollar and the 10-year yield. Dollar index chart down here, look how it collapsed through support yesterday, down to the 200 period moving average and the 100, that's the one below us. I suppose we'll find a bit of support here. In fact, let's put a Fibonacci in, and let's draw it from this recent swing low up to the top. So there's the 38% retracement level that we're at right now, the 38% Fibonacci level, and we're bouncing here off the 100 and the 200 period moving averages. So generally the direction is down for the dollar index. Expect to bounce back up to this red line, perhaps 105 maybe, and then a move down. So the initial move might be short on the euro and the pound and the other currencies and the dollar up today, but whether that's going to carry on or not, I don't know. So I'm not in any currency pairs at the moment apart from the US dollar yen, and this is following the path, and I described this in yesterday's video. Let's have a look at this fractal that I've had on here for a long time now. And we seem to be following this path quite well. Not exactly the same. If we zoom in, you can see there was a sharp retracement after the last intervention. On this occasion, we just edged up higher, followed by a collapse yesterday. Today, we also moved down and bounced back up a bit. But if we do follow this fractal pattern, then tomorrow might be free fall Friday for the dollar yen. I'm not saying we're going to follow the timing of this perfectly, because obviously we haven't done so far. But we have kept the shape. And that to me means that unless this pattern breaks and we move up and make a new high, we should continue to move lower. So watch out for today and tomorrow for another dramatic move lower. Maybe it'll happen next week. I don't know. The moves on the dollar yen will pull down the euro yen and the pound yen as well. Someone asked me about the pound yen yesterday. And basically the moves should follow the same. Same with the euro yen. You can see it's followed a very similar pattern to the dollar yen. Right, on stocks, let's keep this simple. I've taken off my long hedge on NASDAQ, now looking to go short. We've made a new high and we're fractionally above the all-time high so far. This breakout concerns me a bit. I'm not too sure if it's a bull trap or not. I'm willing to take the chance that it might be, and I'll start to look to book profits on the way down into these moving averages. Overall, I think we're entering an exhaustion phase in the market and that we'll see quite dramatic rallies followed by equally dramatic pullbacks. However, I think the overall direction remains long for now. Probably until the first rate cut, or a bank fails, or Biden says something funny, or the Democrats finally admit that inflation actually is a problem in the US and around the rest of the world. So expect a lot of thrashing around at these levels. We're at extreme highs on the S&P and on the NASDAQ and on several stocks. Nvidia's reaching back up into its all-time highs again. Apple's moving back up to the 200 level. Tesla had a big rally and it's fallen back a bit now, but we're long again on Tesla, and we have nothing on AMD or on the SPX for now. If the NASDAQ gets moving lower and we see the S&P also doing the similar sort of thing, then I'll look to sell S&P. We've also made a new all-time high on S&P, and that will have drawn in a lot of FOMO bulls, and I think it's a pretty dangerous area to be going long at. Nothing to add on Bitcoin. We're still long from around 60,000, just above 60,000, and nothing to add to yesterday's update on that. And gold, I've actually taken off the long hedge, so we've taken profit on the long side, and we're now short. The same sort of thing that worries me about this big drop in the dollar and the exuberance in the NASDAQ and the S&P worries me about gold too. What's interesting about gold is that we've reached exactly the 78.6% Fibonacci retracement of the move down from the top, and we're now short at my favorite Fibonacci number, the 78.6% Fibonacci. And I'm also not terribly bearish on gold. I think gold has some more upside to it, but I think we could see some pullbacks before that happens. I mentioned the 10-year yield before. That has fallen down through the trend line and the 50-period moving average, as this arrow suggested it might, but we've reached the 200-day moving average, and the 100 is just below us, and the Fibonacci retracement level. I think we could turn around and get a little bit of a bounce here, or we might have to get down to 4.25 or 4.26 to see some more firm support. Right, and then natural gas and oil. We're still short on natural gas. I covered this in detail in yesterday's video. I don't like the way this is probing up, but let's see how we go. I've got about a 50% position on this. I'm willing to add slightly on more rallies, but generally I think we'll hold below 2.5, maybe 2.6, and then move back down. My overall idea on natural gas is that as long as we're around $2 or below $2, I'm looking to buy. We're not at $2 now. We're at the top of this rising wedge, which is a bearish pattern. That's where we sold. So we're a couple of cents out of the money, not much, and we're at the top of this rising wedge, or this ascending wedge. Bear in mind that we might need to get up to the top of this channel before moving down, and that could take us up to 2.66. So my strategy for natural gas at the moment is to sell into rallies, hoping for a move down to about $2 and maybe $1.85 in order to reverse that trade and go back long again. The general target I have for natural gas for this year is somewhere between $2.50 and $3.50. So any selling at this level might be considered risky, but I'm keeping these positions quite small, and I'm going to be very flexible, willing to turn on a dime, as they say. This is what natural gas looks like on the Henry Hub day chart, and I discussed this in some detail in yesterday's video. I'm not sure if this picture accurately describes my ideas, but kind of it looks like this, and we'll have to figure it out as we go along. These moves, angles, and timings are not cast in concrete, but generally what I do think is towards the end of the year, we'll pick up something like we did last time. Remember, this took place in 2020 during COVID, so this extended period at the bottom here might be exaggerated and too long. The best thing we can do in this situation is switch down to the shorter time frame charts, and that's the 4-hour chart in my case, and keep an eye on that. And then WTI, despite these candles and wicks at the bottom here, I've just gone short again. We initially went short there, took profit down here at about $78 and reversed to buying after the spike candle. But then we got a daily short reversal candle, so I exited the long for a small profit. And we've now gone short again. I don't mind this because natural gas and WTI and Brent crude oil often trade in opposite directions. Notice in the last couple of days, natural gas has been going up, whereas WTI has been going down. So we're now short on both, and I suppose that's a kind of a hedge, considering that they often do move in different directions. Well, have a fantastic trading day. Please like and subscribe on this channel, and I'll see you in the next video.